Hello and welcome everyone to another Wyckoff video. I know you're probably getting tired of my voice by now. I think this is the 12th episode or the 13th, I don't know. But this series has been very long and we do still have many things to talk about. Okay, so what we're gonna talk about today is the breakout event in Wyckoff theory. Okay, so after we see that phase C test event, which is the spring or whatever that we looked at last week, which is basically the shaking, what we can see most of the times, if we are, correctly identifying the proper structures and patterns, is a breakout, right? In an accumulation, we call that the sign of strength right here. And in a distribution, as we'll see in just a tiny bit, that is conversely the sign of weakness. All right, we can label some events in between those, but essentially what the breakout is not only just like a strong movement that shows us a different structure in the market, but it is not an opportunity to trade, right? I don't like trading breakouts, right? I don't like trading very much to begin with, but I think that trading breakouts is essentially a recipe for disaster, right? They serve mostly an informative purpose, all right? Because if we go back, so many people were saying, to long the breakout of the all-time high right here. And, basically you bought Bitcoin at the highest price possible, right? So trading breakouts is usually not a smart idea, all right? And we'll look a little bit more into how to use the Wyckoff method for trading in a few episodes, all right? But essentially, it has a few characteristics, this breakout. So first, we have a change of character. Now, we talked about the change of character in the past, right? It was one of the first events that we talked about. It was the first event. So the preliminary stop is essentially a change of character because it changes from the character of going down to start going sideways, right? And this in the breakout, what we see is that it stops going sideways to take some direction. So for example, it could stop going sideways here to go up, or it could stop going sideways here to go down. So that's what the Wyckoff, breakout is. Uh, Not only this is a strong movement, but it is also usually composed of two movements. Okay, so first we usually have a very strong movement in in a given direction. So first we have something like a big breakout, for example here, and then we have some minor correction just to test back into the range and see, if there is some more stock to absorb, right? Every single Wyckoff event has a cause, and the test happens when there is no more stock to be sold or no more stock to be bought. All right, for in the case of the large traders, the institutions, and whatever. Okay, so how does this appear on the graph? Now we have seen some examples. Ruben points us some examples here, but some things that we should observe is that it can happen with high volume or with low volume, right? So it can happen both ways. So usually they occur with increasing volume, so with higher volume than usual. But sometimes, since there is so little stock to be sold, or in this case, coins, that the volume is, low, right? And it can be low, and that is no problem, but we have to analyze that into the context. How successful was the accumulation phase? How much of the cause was built? All right. Okay. Now, besides the examples that Ruben points to us here, I think it is, maybe a little bit more interesting that we talk about if we go to the Bitcoin chart right here. Okay. So here in the Bitcoin chart, we can see some, points here. So for example, when we see this big breakout to the downside, this was a major sign of weakness here, right? And then we have this small retreat here. Of course, there are many ways to interpret this distribution here, but this was basically the last point of supply, and then we went back down, all right? So this is what Ruben is talking about when he's talking about breakout. So same stuff here. So we have some breakout here, and then we go back down, test it back, go up a little bit more, even test it again. And I'm sorry if this drawing here looks a little bit weird, okay? It's not on purpose. So yeah, here it is. And we can see some testing back. All right. All right. So this is how it appears on the graph. Now, there are some key, events that we should see that are important to help us observe these breakouts successfully. Again, it's not an opportunity to trade, but it is an opportunity to see when an accumulation is ending, when a distribution is ending. All right. So first is that we do not immediately re-enter that range. All right. So let's suppose we have a trading range right here, for example, and it breaks out, right? It was, ranging right here, and then it suddenly breaks out. What you don't want to see is that it immediately re-enters the range, right? What you want to see is that for it to maybe hang around these lines a little bit, and then maybe a little bit later, it enters back and goes back up. But you don't want to see it re-entering the range like right after the breakout, okay? That is very important. Another thing is the lack of interest. So when we are ranging, near the range, it's nice to see lower volume. So there is a lesser interest in trading that range. All right. Also, the distance of the rupture could also be, another indication. So of course, if we have a range like this, right, and it breaks out just by a tiny bit, it's not as strong as if we were to do something like this, right? It's obviously not as strong. So this must be thought as well. Again, it does not offer, and I have to emphasize this so much because a lot of the people in, crypto YouTube, TA YouTube, whatever, they are just saying, oh, trade the breakout, whatever. I don't think that's a good idea. It's not a good idea, okay? As I always say, it's good to practice sitting on your hands, right? Not just for Wyckoff, but also for many other things in, just trading and observing charts. You should practice doing nothing, all right? Now, let's talk about the sign of strength specifically. This is the event that happens after an accumulation phase, and we can have some minor breakouts, during the range, and we call those the minor signs of strength, and then we have the major signs of strength. All right, and it does denote some strength in the market generally, of course. Now, again, as I said, there's the minor sign of strength. It is usually the real sign of strength. It is usually a big bar. For example, like we saw back here, we were seeing like what this bar had a range of like, I think it was 10 or 20% in a single day, right? 15% here. And then, for example, if we look at the sign of weakness here, we had some pretty big bars too. So we had, for example, this bar here, 14%. We had this bar here, 16, 14%. All right. So usually we do see big bars, during those sign of strengths. Okay. Now let's talk about the sign of weakness, all right? The signs of weakness, it's basically the same thing. As we've been seeing, one of the things that I think is most beautiful about the Wyckoff theory is that the distribution is basically symmetrical to the accumulation, all right? These are two symmetrical patterns because they follow two basically symmetrical and very similar functions, all right? They start to buy for the big traders to buy for as low as possible and to sell for as high as possible. All right, and because of that purpose, they do end up being a little bit symmetrical to each other. All right, now again, it's basically the same stuff. You can have minor signs of weakness and whatever, and we have bigger bars in the sign of weakness. All right, so I think this was it for today. A little bit of a shorter video. Next week we're going to talk about confirmation events, and these are very important, so stay tuned for that. If you want to sign up for exclusive content, newsletters, we have exclusive spreadsheets and all sorts of stuff, you can access thecryptogarden.io and sign up there. All right, it was nice having you, and goodbye.